Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TikTok. We have some fast markets to the upside this morning in precious metals here, following through with the reversal that we saw yesterday. And we are trading through the average of today, which is 1776.77. We are continuing to follow through the bullish momentum that we identify at 1677. Which happened to be the golden ratio Fibonacci correction of 61.8%. That turned out to be a perfect target for a reversion to unfold. The target activated now is 1786 for gold, 2621 for the silver market. Let's just watch the market here as it trades in this early hour and see where it is in relation to the levels here. We've activated 1776. We met the target. And if you are trading short term, use these levels to manage your positions accordingly. The target of 1776 was activated. Now, the market trading above the average price is going to ignite the bullish trend momentum. And we're looking at the next target above of 1786. As the next target. And we have all the way up to 1800, the targets for the sell 1 weekly level and the sell 2 daily level, as well as the monthly sell 2 level of 1799. We are carrying long-term core positions long, and we're holding on to those. What we're doing here is we are showing you how I implement the day trading strategies using the VCPMI. There are no signals right now in the gold market as it trades around the average. It tells you if you bought it from below, that's your target. Go neutral. And wait for the highest probability trades to be identified. And that is basically the market coming down into these levels here that we have been talking about the last couple of days. This area of 2594, 2585, 2570 for the silver market happens to be a very strong harmonic area, a harmonic alignment that basically integrates the daily, the annual, the weekly signals. And the market, as you see, every time it's come down into these levels here, it has reverted right back up, particularly the 360-day average price that we're looking at 25.85. So now the market coming down, testing these levels a couple of times and putting in what appears to be a major bottom here. Let me do a little bit of work in here and let me see what the trend lines suggest. As you can see, we've broken out of this trend line here, and it looks like we're moving into this higher level above that points to 2065. And I think what we're doing here is we are building what looks to be an uptrend channel on the silver market. So we are in a bullish trend momentum. The target is 26.21 to 26.55 for the silver market. And the gold is trading above the average daily of 1776. In our target is 1786, which is the level above. So what we have done here is we have identified the structure for the silver and the gold market for the day, and we are in a bullish trend momentum for the day. There's nothing to second guess or wonder. Let the market accomplish these targets, and the AI will tell you what to do next. For right now, we're looking at 26.21 as a target in the silver market, and 1786 for the gold market. Another $10 roughly higher for gold, and another 10-15 cents higher for the silver market. If you have multiple positions, these are the levels that you want to start taking some profits on your futures, if you long your futures. very, very positive support across the board. Basically, we're looking at the derivatives across the board up quite a bit here. Nugget is up 108. JNUG 123, up 1.31%. Nugget is up 1.72%. We got a little bit of a pullback here in Bitcoin, and we want to look and prepare for reversions to unfold. In Bitcoin as well. So keep an eye on a potential reversion occurring on GBTC. The silver market seems to be stronger today than the gold market. I think one of the comments that I can make with regards to the fundamentals is that the pandemic still is uncertain about ending this pandemic, because we're beginning to get a lot more infections, I believe, and we got to keep an eye on that, as I believe the pandemic is not over yet. And so we definitely want to keep that in front of us, and particularly see how these economies are beginning to recalibrate on the face of coming back to some kind of a normal economy, some kind of normalcy. There is still a lot of uncertainty fundamentally, and it's very difficult to make any sense at all in terms of the policies being implemented, the rhetoric that is out there, politically. So I'm focusing right now on the market. What is the market telling me? Putting away all this emotion, all these fundamentals. And if you came in long in the futures with multiple positions, the average price is a target area for you to unload some of those profits. When the price trades around the average price, as it is right now in the gold market, it pretty much is neutral to bullish, but it defines the trend momentum. And as a trader, it tells you, listen, take the highest probability trades, and that is that when the market gets up to the sell one, sell two, or the buy one, buy two, that's the highest probabilities for you to enter into a trade. If you are buying into the average price, it's a 50-50 standard deviation. If it goes up to sell one, it's a 50-90 standard deviation. If it goes up to the sell 2 level, it's a 50-95% standard deviation to the relative implied volatility to the mean. And this is where the probability is at the highest, most optimal level for a reversion to unfold. The same principle applies when we're looking at the market into that B1 or B2 area. As we take a look at gold coming down into that 1739, 1740 area for the week, because we've been using these weekly numbers this whole week. We have pretty much reverted from these levels here, very clearly defined the buy triggers here that reverted the market back into the target of 1752, and of course the targets above on the weekly, and 1776 was the extreme above the sell 1 level. For today, they gave us 1786 as the sell 1 level. You can see the market completing this pattern and then reverting. So this is what the AI suggests for you as a trader, that when you get these targets completed, that's where you lock in your profits, your targets, and then you go neutral again. And then you do nothing, because up here above the sell 1 or the red level, all the way up into that 1799, it's telling you that you can expect potentially sellers to come into the market, supply to come into the market. And that's where we are. That's where we are. So we seem to be breaking on the upside here above the average price. We are activating a bullish trend momentum, entering into resistance, you might say, is what most conventional technical analysts would classify this level up here. When you take a look at the silver market, it has a stronger chart formation, and it's stronger than the gold market, trading above the average of 25.94 with a target of 26.21 to 26.55. Continue to trade the long side. Just be patient. Hold on to the longs. Let the market come to the targets of 26.21 if you're long the silver. and 1786 for the gold market. The daily chart on the gold market looks pretty bullish. It's breaking out of this Fibonacci trendline resistance. And the targets are right above it. So they're all the way up to the weekly 1823. So there is a very high probability chance that if we accelerate the momentum above the daily average, that the market could accelerate into this zone, into this supply zone that is an ideal target to cash in some of the longs in here, which is all the way up to that 1823 level. With regards to the fundamental picture, once again, there really is not any new developments that can affect the market here. Pretty much everything that's been talked about has been discounted in price. So we want to follow the market here and let it tell us here where we're going. I want to watch the market here for a few minutes, let the market resolve this resistance here, and let's just watch the market here for a little bit. It's very quiet here. 1776.30 last. Market is trading right around the average here of the daily average of 1776. There are COVID concerns developing again. So it's something that we want to keep an eye on. Silver target 26.21. 26.12 last. You can see the silver market trading a little stronger above the average here of 25.94, while the gold market is trading, struggling at the 1776 level here. So let's just see what the derivatives are doing here. They're pretty strong, very strong to the upside here. Continues to support the rally that we are seeing in the metals here. Very quiet here, not much going on across the board, so I'm just watching everything else here. It's fairly quiet. quiet with an upward bias for the precious metals. You want to keep your long position here. If you entered into GBTC, you want to keep your position long. If you're trading on GBTC, it is probably the most volatile instrument across the board. So you want to adjust your emotions, you might say, to the volatility of Bitcoin. That is essentially, you want to commit to it and hold on to it. It's an asset. It's a virtual asset that is traded very, very aggressively. Volatility is unlike any other instrument, and it's trading at $46,800 when just a couple of years ago it was in the teens. So it is a tradable asset. Just make sure that you measure your risk and you don't trade from an emotional basis. Excuse me. Very quiet here. We're trading around the average price, so there's not much to do here. And some of the fundamentals that we're dealing with right now are really factored in. Nothing is new. Shortage of supply. Shortage of supplies is the overwhelming sentiment out there. We're having problems. Mints are having problems. And so it's just the same, you might say, argument that we're having with housing, that there are no units available. We have the biggest shortage of housing. We have the biggest shortage of just about, I believe, we're going to see developing on major products as we move into the economy of what they call, some kind of new normal. And, as you can see here, there is a shortage of lumber. There is a shortage of commodities. Grains are just exploding to the upside. And, the CPI is being reflected, I believe, in a misrepresented way, the actual truth of the inflation pressure that we're seeing here. According to the government figures, obviously, we don't have inflation. They don't include food and energy in their equation. And so, according to their numbers, inflation is below 2%. And they're doing everything possible to, increase inflation up to 2% levels there, or even higher. So, the numbers that I'm running here are indicating that the inflation levels are really far above what the government is reporting, if you include food and energy particularly. And I think that's what's being reflected on the 10-year note, that has seen a substantial increase in yield. We are trading right now at 158.36. So we made a high there of about 177, and we have seen this huge rally on interest rates. Now the question is, Are interest rates going to continue to go up on the 10-year note, putting pressure on the short end of the market, on the short end of the yield curve? And is that going to put pressure, you might say, on the stock market, or particularly on the bond markets? You're looking at soybeans trading at $14.79, $14.80, almost $15 a bushel. Copper is at $4.26. So you can see, if you just take a look at the prices of precious metals, commodities, real estate, are exploding in value. I think we are going to be facing probably one of the biggest shortages that we have ever seen. I think the real estate shortage is an indication of everything else. Everybody is trying to jump into the real estate market on the basis that obviously rates are beginning to go higher. The 10-year note are reflecting that. Inflation is pretty much on the side wing, so to speak, waiting to make its entrance. And if you take a look at asset bubbles like real estate, like precious stones, art, even virtual art is selling at incredible premiums. So are we seeing the move in the gold market expected? Are we seeing the unfolding of this new bull market developing? And I think we are beginning to see potentially a monumental shift in demand as we move into the rest of the year. People are beginning to recognize that the economies are not doing well, that they need a lot more support. They need a lot more stimulus, and particularly if we're moving once again into another panic, another COVID panic. So my feeling is that, first of all, you got to be patient here with this precious metals. They are not reacting the way that everybody's expecting to, and they won't. The metals are contrarian, and until we get a measure of the sentiment to become bearish, I believe we will see a challenge in price at these levels. There's too many bulls. There's too many people expecting the gold market to explode. And as long as I've been around, when everybody's expecting it, it usually doesn't happen. And in fact, what happens is that sometimes we get the opposite of the sentiment reaction. We get the opposite in price of the sentiment. And that's what's been happening in the gold market, that, on the face of all this economic chaos, shortage of supplies across the board, housing, commodities, silver, physical, gold, physical, commodities, precious metals in general. The market in metals is trading at 1775. When, we really don't know what the price discovery or the mean of gold and silver are, pretty much. They've been suppressing the price consistently, not allowing for the price discovery to reach its mean, its real value. So it is pretty much climbing a wall of worry, so to speak, in terms of the gold market. But with the policies that we have, the monetary policies that we have, really are putting the U.S. dollar at risk of losing intrinsic value, purchasing power, and the status of the world's reserve currency challenged. So you see in the in the silver market here a little bit of a selling pressure coming in. As I mentioned to you, as we move into the sell one level, the probabilities increase. From 50-50 to 50-90 standard deviation. And so these are the levels that we call targets, and then we book the profits. If you're long and you are carrying a long position, make sure that you trail it with a stop. As the market goes up, you can trail the stop to break even initially, and as the market goes up, if you want to hold on to it until the end of the completion of the target, then you can trail the stop. We have completed about a 23% Fibonacci correction on Bitcoin at 48.12. I'm sorry, 46.52 is a 23% Fibonacci correction. We are into that buy two level. On the weekly, let me adjust some of these numbers here for today and see what where we are. We are coming right into the buy one or buy two level on the weekly. On the weekly, let me just take a look. I'm sorry, I think it was the daily here. Yeah, it's the daily numbers that we're looking at. 42.34. Let me take a look at the weekly here for a minute. The program is being updated now, so we need to wait here a few minutes. Yeah, we've come down to the buy two level daily of 45.34. Actually, that's where we are at the buy two level. Not quite coming down yet to that level, but in that vicinity. $46.64 is the buy one level daily, and we pretty much are trading around that level. $49.44 is the sell two level. So the numbers on the left are the daily numbers. And let's take a look at the weekly. $48.97 is the buy one weekly, and the buy two weekly is $46.57. So we are oversold. Very quiet here, very quiet. A little bit of reversion occurring here from the average price on gold, as we suggested for you to go neutral. So we are getting a little bit of profit taken here of the average price. But once again, if we do trade above the average price, then we're going to be looking at a bullish trend momentum unfolding all the way up to 1786. So continue to hold your long-term core position long, and depending upon, again, your multiples, depending upon your inventory that you have, you can use these targets of sell 1, sell 2, daily, weekly, monthly, for you to lock in your profits. On the short end of the market, use these targets to lock in short-term trades, particularly if you're trading futures. As we're coming out of this a bottom that we're looking at from a low of 16, about 77 or so in that vicinity, we're looking at about $100 higher already from those lows. And I still think that we have another $100 to go on the upside before we reach any kind of significant resistance. But there will be corrections in that process that you want to use to accumulate long-term core positions. Be patient. I think we have some fantastic markets ahead of us. And the VCPMI will take us through that process. Thank you again, once again, for the opportunity to share this with you. Please be well, take care of yourself, and I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.